Welcome to the Mortgage Broker Podcast, where we explore everything related to mortgages and the home buying process. If you're a first-time buyer or a seasoned investor, this podcast is for you. I'm your host, Vanessa, the Mortgage Broker. So, let's get to it.
You can keep up with her tips and tricks on the Mortgage Broker Podcast. And she's having an open house. She's got a beautiful new space. That will be on November 22nd. So, here's the girl, Vanessa.
Thank you. So don't be scared of the conversation. I'm just gonna open it with that. A lot of people, because it's around finances, they don't wanna ask questions because they feel embarrassed. You can never give me more information than what's needed. The more information I have, the more I can be an advocate for you, and the more I can help you in your current financial situation. It takes as much energy to wish as it does to plan. So anybody who has been listening to my podcast or looking at any of my social media content, again, it's more about educating everyone. I want more people to understand the biggest debt that they're going to hold. I want them to understand what equity actually means in a home outside of the assets that they may have in a savings account or a tax-free savings account, and how they can use that to propel themselves and build up that savings for the time that they do decide to retire. So my biggest thing is let's educate, let's empower, let's keep moving that pendulum forward so that when you are getting closer to that retirement age, that mortgage is actually coming down and you use that asset to the best of its ability. This is probably what you're seeing in the news right now. The biggest thing here is this is all noise. It's all noise. Because at the end of the day, when you sign up for your mortgage and you take that 5-year term or you take that 2-year or 3-year term in this last year, because that's what a lot of people did to kind of hedge their bets against what was going to be happening in the market. If you have the right people in place, your accountant, your lawyer, your mortgage broker, your real estate agent, they are the people that are going to help you make those financial decisions that are going to keep moving you forward. So when I say that this is just noise, it's more so the fact that you're picking that term in the market right now. The amortization or the life of your mortgage is gonna be 25 years. You're not gonna pick up that mortgage today and go, okay, I'm gonna have this rate now, but in 5 years from now, if my rate goes up, I'm just gonna drop that mortgage. You date the rate, you marry the mortgage, and I'm sure you guys have heard that before. So I just had the incredible opportunity to go to Mortgage Professionals Canada. It is a conference that they hold every single year. For those of you who don't know who Benjamin Tall is, he is the CIBC Deputy Chief Economist. This guy, I love listening to him talk, but he's a realist. I feel like a lot of economists are they're a little bit too opportunistic sometimes, or a little bit too optimistic, if I will. So one of the quotes that he said is, if the Bank of Canada does not drop interest rates, it's not going to be pretty, to put it mildly. Right now, in 2024 and 2025, there's over $163 billion in mortgages that are coming up for renewal. In 2025 to 2026, that number doubles. So right now, we're in a spot where we didn't have as many renewals, and it actually made sense for them to make those numbers the way that they did. I don't always agree with the Bank of Canada. I'm sure not a lot of us do. But if this was happening when more mortgages are coming up in 2024, 2025, into 2026, we'd be in a lot more trouble. So there has been some policy changes actually to the mortgages And this just comes with a higher interest rate environment. So the biggest one being anybody who is up for renewal right now, you are not stuck with your current lender. You can actually apply to a different lender. You can talk to a mortgage broker, talk to a mortgage professional, and go through your options. And as long as nothing changes to that mortgage, so the balance, the actual life lasting of the mortgage, you can move that mortgage with zero cost and only have to qualify at the contract rate. And so what that means is there's not an additional 2% on top of that rate that you have to qualify at. These are the 5 things that lenders look at, okay? So collateral, we want to know what the property type is, we want to know the market, the location. So that's basically saying, what is the house, where is it, how much is it worth, to define what the equity in the home is. The credit, that really just boils down to your credit score, do you make your payments on time. The biggest thing that a lot of people don't realize is if you are trying to increase your credit score, if you have a Visa with a $5,000 limit, and the balance, even though you pay it every single month, and that balance is $4,500 every single time you go into that next monthly cycle, it's automatically going to bring your credit score down because it's considered high utilization. So what you want to try to do, if you're trying to increase that score and you're trying to combat that beacon score, you want to keep that balance under 2,500. You want less than 50% to be utilized on that card. Capacity, so they're always looking to make sure that you've got the ability to repay the loan. And what's the job stability and what is the income? Capital, so that comes down to the down payment and available closing costs. And the character, this is the biggest one. This is actually kind of what makes and breaks the deal. So if any of those other categories are a little bit weak, the character is where it really ties together. And that's where, as long as you're giving me all of the information, or you're giving your mortgage professional all of the information, we can build that story to fit what you need. If you don't tell us a story and we come up and we find that you didn't pay something, or there was a consumer proposal from 10 years ago, if we don't know that information, we can't help you. Because now we're coming into a situation where it almost makes it look like we were trying to get away with something on an application where in the first place we didn't actually know. So the character is the biggest piece that kind of ties it all together, so just be honest with who you're working with. So I would say that these 3 areas are kind of what set me apart from some of my colleagues in the industry. I do specialize in self-employed, so for all of you that are self-employed, there are programs through a lot of lenders that you can do. It's called stated income, and that's if you've been in business for more than 2 years, and the income kind of makes sense. So again, that's where the building of the story and putting it all together and working with the underwriter and working with the credit team, that type of offering would come together. Construction financing, not a lot of people like this or don't like this type of lending, but I actually love it. A few years ago, tore down a house and decided to rebuild one on my own because I'm crazy. And then it was like, oh, I can help other people do this. So construction financing is another area because I've done it myself, and then I've done it for a number of clients since. And then commercial financing, there's not a whole lot of commercial financing offering with those in the industry in this area. So if you are looking at something in the commercial sector, I do handle that as well. I would really love if all of you would join me on November 22nd. I'm super excited. I just opened a new office. I'm having an open house. There's gonna be food and wine and champagne and all the good stuff. So if you are free on November 22nd from 6 till 9, I would love for you to join me and celebrate. And